basket, when I look at it, it's up 63%. And crypto has gone bananas. Bitcoin's up 119, ETH's up 63, and Solana's up 500%. I've tried really, really hard to make sure that everybody's set up for this cycle. I've tried to communicate it. I've gone out a lot to say, don't fuck this up. Buy and hold, don't use leverage, use cold storage, do the right thing, don't get too speculative, don't FOMO, just don't fuck this up. This is the biggest opportunity we've ever been given. I've said that all the way from 2020 onwards, and in fact, I said it all the way back in 2012. It's the biggest macro trade of all time. Don't fuck this up. And if you're not a crypto person, technology is one of the biggest opportunities we've ever been given, the exponential age. Again, don't fuck this up. So pretty good. And exactly in line what I've been imagining, which is macro spring. Macro spring and crypto spring are the same thing because macro is crypto. I've explained all the way through. These are not different things. And there's a bunch of old macro people who are like, oh, I don't like that bloody crypto stuff. It's nothing to do with macro. It's driven by exactly the same cycles. It's completely in line. So, spring. What is spring like? Spring is one day it's raining, next day it's sunny, then it's frost, then it's getting warmer, then you think it's going to be amazing. You get your t-shirts out and then it's freezing cold again. That's what spring is like. That's exactly what macro spring is like and crypto spring. So we saw spring and we saw choppiness, sideways ranges, a squirt up in the beginning, then slowed down, and then we're now getting into late spring. Late spring, we're starting to see what I refer to as the banana zone, which is this massively positive end of year phase. Normally speaking, again, probabilistically speaking, no guarantees around here, so don't try and hold me and go, well, it didn't go up at the end of the year, you're a bastard. I've thought of that stuff. Probabilistically speaking, it goes up into the end of the year, and usually fast. And nobody catches it, and everybody's chasing it because they're all trying to chase performance for the end of the year and prove to their investors that they had the right trades on, which obviously they didn't because all the institutions have been massively underweight. So that, I think, is what's taking place, and that's usually the end of crypto spring and macro spring. Then we start transitioning to summer. Summer is when rates start coming down, box looking like it's starting to be ticked. When inflation falls, that's happening. And as you know, my views on inflation are it is not sticky, it's mean reverting, and it will go back down to 2% or lower. I think it actually goes negative in this cycle, and I think core inflation will go negative this cycle too. And that's what we're going to look for in 2024. Surprise. And I think the Fed purposely orchestrated it. They want it. They want to see rates lower so they can refinance the debt. So interest rates falling. Inflation falling, unemployment rising, and then when you look at the forward-looking indicators, growth will be picking up from the floor. That is the perfect macro environment. Then we're coming into election year, as all of these macro springs have been since the Great Reset of 2008. They're all the same timing. Macro summer is the same as the election year. Is the same as the halving year in Bitcoin. It's all the same bloody thing. So that is about to play out. So 2024, I think, is going to be a pretty wild ride. Normally these years tend to have periods of sideways consolidation or corrections, and then these huge spurts. And we tend to see a couple of those during the year. So nothing's going to be a straight line, but it should be an extremely good year. And then 2025 will be even better. That's usually the batshit crazy year, which is the transition from macro summer into macro fall, where everything kind of goes exponential before you start transitioning to winter, rates start going up again, markets pull back again, and we go through the same cycle. And that's been happening consistently since 2008.
Raoul Pal also recounts one of these investment plays and walks us through the process that is similar to what many investors in the space experience while trading the crypto market. He uses it as a guide to teach young and upcoming investors the importance of conviction and patience when investing. Despite Bitcoin being up 120% year to date, the leading crypto asset is still about 46% lower than its November 2021 all-time high of $69,000. It is therefore normal for some investors, especially those that bought at the top, to be expecting a bigger upside rallies before they can begin to share in the excitement. Pal says these big rallies are coming, just like they did during previous cycles. We just have to be patient enough while constantly and carefully nurturing our conviction in the asset class and its future in global finance. To further drive home his point, the macro guru shares a personal story about investing in Bitcoin previously and selling too early before finding a point to return again. Let's now get into the video and listen to what he has to say.
Simply hold until new highs. Right, I'm going to tell you a story. I keep telling this story. Look, it's horses for courses, as the English expression goes. I first bought Bitcoin in 2013 at $200. My thesis was this is a 10-year bet, and I think it's worth $1 million, but I'm going to discount myself by 90% for the moron factor. So therefore it's worth $100,000, and it's at $200. And I said, this is the best macro bet we will ever be given, and the best macro bet we have ever been given. That was 2013. I was pretty impressed if I look back, because it was exactly the case. So I rode it up, and it went up to 5x from where I bought it. Then it collapsed 85%. And I'm like, fine, it's an option for me. It's a 10-year bet. It then ran up 10x into 2017. 4 years later, I'm up 10x. And I got a bit nervous in the space because of forking wars and other stuff. And I stupidly forgot the initial premise of the trade, which was this 10-year bet, you just run it. Because when the P&L stacks up, you start thinking, well, really, do I want to give this back? But you've got to learn how to do that if you're running long duration time horizons. So I sold out at 2,000, 2,500, and it went up to 20,000 in that run. And people were laughing at me, and I was like, look, I've made 10x, thank you very much. I've done this really, really well. And then I watched it, and then eventually got the entry point to get back in again, which was April 2020, and it fell back down. I think I got in 6,500 and bought it, from 6,500 to about 12,000. I kept buying it, and it rocketed higher, and much bigger position than when I first started. Okay, great. And I still own it today. It's pulled back up again. Okay. So I went back and looked. If I just kept my original investment and not touched it, even with the market down from its high 50%, I'd have made 5 times as much money. And my bet in 2020 was a lot bigger than it was back in 2013. And then here's the real crux. And me and backwards baseball cap Brian were talking about this before we came on, is like, if you just remember that log channel and the big cyclical up and downs, which is the economic cyclicality, if you just buy within 30% of the low, which is not that difficult, 30%, don't even have to be bottom ticking it. I just calculated I got 30% near the low.